Welcome back. Friday, we take it down a notch. We look at companies. We talk to you. If you're interested, please give us a shout if you would like to be part of our conversation, where we have a one-on-one and talk about investments, and we really just want to answer your own personal investment questions. We have a very spectacular lady in the studio today. I will introduce her just after this brief. Let's take a look at Stanley Fahari I-Rate. I'll take a slight step back. So we have the Stanley Fahari I-Rate, which is coming up on your screen now. It's a real estate investment trust, and it is listed on the Nairobi Securities Exchange. Our next slide will show us some of the companies that this company has invested in. It has invested in the Greenspan Mall. That's one of their key flagship projects. It also has investments in light industrial buildings, and these are valued at 3.5 billion shillings. And the next slide. The objective of this rate was really to provide consistent income and capital growth in the long term. And it uses an active management approach, target looking for properties where it can be able to add volume. One of the benefits of this is that it actually has no tax applicable to the assets in the rate. That would be available to you on the next slide in terms of information. And what happens is if you buy a holding in this particular rate, then you would be charged from the distribution of the earnings for this rate. How this rate operates is it makes money from the properties that it has under its assets under management. And once it makes money, it has the mandate of distributing at least 80% of this revenue to the shareholders. The next slide. Some of the risks that are available when you're looking at this as an investment is the fact that only part of the available units of the rate are listed on the Nairobi Securities Exchange. Less than a third of what is available is listed. So there's always the risk that there could be added supply of available trust units that you can buy as a shareholder on the NSE, which could dampen price. But what typically happens is when you're buying the I-Rate, it's like you're buying a share in any stock. Only that when you buy this particular unit in the I-Rate, you're investing in a unit, but this unit is typically going to give you a return based on the underlying assets that this particular company holds. Our next slide just shows us the capital structure and the financial structure for this company. All right, this is also just a continuation of some of the risks that I have highlighted, because there could be a secondary offer, and this would have an effect of adding the supply of units that are available to you as a shareholder. As I have mentioned, only a third are available in the market, and there's always the risk that more could come into the market at any point in time. Now, for this Stanley rate, it was initially owned fully and sponsored by Stanley. Stanley folded some of its operations, that is the asset manager, towards the end of last year, and it was now bought by ICEALION company. ICEALION bought the entire holding of this company, and the effect of this transaction was all the assets that were held and formerly known as Stanley I-Rate have now moved to ICEA, and it's now known as the ICEA Stanley Fahari I-Rate. This is just an overview of this particular I-Rate and what its finances look like. The turnover, which is the value of funds that they get from lettings, was 415 million in 2019 compared to 357 million in 2018. The profitability was 107 million in 2019, and this is a key line you want to keep looking out for, because the company distributes 80% of this profitability in terms of the mandate and the arrangement it has with the holders of the I-Rate. The liquidity ratio 9:1. The assets under management are valued at 200 billion. Let's take a look at the next slide just to see how the assets have been evolving. All right, so this is an overview of the assets of ICEALION, who's the sponsor and the owner of Stanley Fahari IRate, and that's 204 billion shillings that are actually owned now by ICEALION. And it's important just for you to get a trajectory of how ICEALION has been managing, because now they are the largest holder, as well as, not the largest holder, sorry, they are the sponsor of the IRate. They are the managers of IRate. The CEO of ICEALION is the CEO as well for the Stanley Fahari IRate. So it's important to know who are the partners of this company when you are looking to invest in it. Let's take a look at the next slide, which is the price of Stanley. This particular stock, when it came into the market, it came in at a price of 14 shillings. There was a lot of excitement because the core investment case for investing in the IRate was this. What you were saying is the rate actually has properties, Greenspan and other properties under its books. What it does, it operates as a professional manager. It earns revenue by letting in these spaces. And once it earns the revenue, it distributes it to the owners of the trust. The diversification at the time, or rather the justification for investing in it, was this. Instead of going to buy a real estate opportunity for yourself, which is pretty pricey in terms of the initial amount you needed to put in, the rationale was, why not buy the rate, the investment rate, and then you can be able to earn from the revenue that they generate. It started off at 14, and the people who bought it at the time have lost value because now it's at 5.4 shillings. Why is it 5.4 shillings? A couple of issues have actually made it get to this level. The company, with the assets that it has under management, which is the likes of Greenspan and the other properties that it holds, have not necessarily been generating an above the market return. Typically today, if you own a real estate opportunity, you have an annual yield of 8%. You could probably get higher, you could get lower, depending on the location of your property. For the properties that are owned by the rate, the return they're getting is 7.4%. So as an investor, you ask yourself, if I can afford to buy a house for 3 million, if I can get 8% return, why would I put the 3 million and invest the same value in a rate which is only able to earn 7.4%, and over and above that, once it earns 7.4, it has to cover for its operational expenses, and once it covers for that, it has to pay tax, and then after that, only does it distribute 80% to you. So that has been really the point of not too much excitement, a bit of investor apathy, and we've seen it come to 5.4. But now at 5.4, we've seen a lot of volume go through, especially on Monday. And this is what is happening. Perhaps at 14 shillings, it didn't make sense. But at 5.4, you're saying that the value per share compared to the investments that this company holds, there is a considerable discount. This is where the value of the assets that the company holds are. This is where the market is valuing it at. So there are some people who are saying, perhaps this differential makes sense for me to purchase it now for the longer term, with the hope that a recovery in the real estate property market could probably get your price from 5.4, maybe to 8, maybe to 10, but on a longer term basis. That's our case for today, just showing you the pros and the cons for this particular investment opportunity on the NSE. That's the Stanley Fahari IRate, which is now fully owned by ICEA. It is at 5.4. We've seen a bit of uptick in terms of activity at the beginning of the week. And I think the investment case today is the fact that what it owns versus where it's valued by the market, there is a deep discount. And there could be an opportunity for a long-term holder to gain in terms of capital appreciation when the price goes back up, or the distribution from the earnings of the rate when and if the property market corrects itself. What do you think of this analysis? Does it make sense to you? Would you like us to add a bit more information? What other companies would you like us to cover? I hope you can be able to tell us on our SMS line 20146, or you could tell me Bithe Mwema on all the social media platforms. One of you wrote out to us and you said, kindly, can we do a case for Williamson tea? We hear you, and it's certainly up our alley. We will plan to do this, and we will indicate to you at what point we will be doing this. For next week, we want to look at Kenya Re. One of you asked us about Kenya Re, so we scheduled Kenya Re, and then in the subsequent weeks, we also schedule Williamson tea for your benefit. Tell us, what do you want to know? What is the thing that will help you make an investment decision, either decide to buy or to sell, and how can we package it for your ease of information? Well, we come now to the most exciting part of the show. We are joined by Mercy Wamoyo. She is the Chief Executive Officer of Bosveld. Mercy is involved in the business of transport, in the business of helping you have fun. She is a fun soul, she is young, she's spectacular, and I can't wait to hear her story. But even before hearing her story, she'll give us her perspective, but she also wants to ask us a bit of questions in terms of investing, whether investing on the NSE, whether investing in her business, and what information or wisdom can we be able to share from where we sit. I hope you can be able to join us after this. Tell us where you're watching us from, and also just chiming into the conversation so that we know we are together. We'll see you after the break.